Okay, so we're going to start from the task one, and we're going to look at the task two as well. So we're going to go through every single question we have relevant to task one and task two. And also we're going to look at the practice assessment one and assessment two to look at a few questions for the task one and task two. So when I say task one, what exactly we mean? The task one is relevant to the adjustment. Now in the exam, you might have two question, not two exactly. So one question can come from the two way. The first one could be from the sole trader point of view. So sole trader and partnership or the self-employed could be from that point of view. And the next question will be from the limited company view. So what we are talking here, so when you have a limited company or you have a sole trader, we prepare the accounts. And after prepare the accounts, the next thing is to prepare the tax return. Now, if you're already working in the tax sector or if you work on the accountancy practice, you already know that something called CT 600. So CT 600 is something that we prepare based on the accounting profit on the year-end accounts. Now, sometimes the profit we have on the year-end accounts on the profit and loss account is not that profit we're going to calculate the tax on. That means my tax figure need to be adjusted. So that means when we have any sort of accounting profit, this profit need to be adjusted through some transaction. And we're going to look at that first, then we're going to look at our capital allowance. So let's start with the first one. We're going to look at our first assessment. That is, I believe that assessment two. Let's look at assessment one first. Then we're going to go through assessment two. So let's have a look at this one. All right. So this is our assessment number one for 8 marks. In the exam, you're going to look at exactly the same question. And obviously, more we practice will be more ready for the exam. So let's look at this question for task one for 8 marks. It says this task is about adjusting the accounting profit and loss for the tax purpose. Now, the first thing we have to remember that is what type of company it is. Very important. So this is our first point to remember. It is a limited company or it is a sole trader, because the treatment will be a bit different. If we have a limited company, the treatment will be a bit different. If we have a sole trader, the treatment will be a bit different. When I say the treatment will be a bit different, what does that mean? That means when you have a limited company, the salaries or any drawings, it will not be considered. But if it is a sole trader or partnership, then if we have a salary or if we have a drawings, it needs to be adjusted. So let's look at this question first. So we have a company here. The profit and loss account of a company A is follow. Now remember that if it is a company, they'll tell you it is a company, but if it is a sole trader, they will tell you the person name. For example, they can tell you Mr. David Company or Mr. Anderson Business. So if you see they mention the name, that means it's a sole trader, or they might say is a partnership, but most likely they'll give you only two options, either as a sole trader or the limited company. So let's have a look at this one. Profit and loss account of a company A as follow. So you have a sales, cost of sales, gross profit, expense, depreciation, repair and maintenance, sales and marketing, administration, legal and professional, and motor expense. And now we have a net profit. Now it is very understandable when you prepare the profit and loss account, you should have a profit. And this profit you can see here, 217,742. This profit from our profit and loss account. Now the question here is, are we going to use this profit to calculate my corporation tax? The answer is no. We have to make some adjustment if required. Now, when I said if required, that means if there is no adjustment required, that could be my final profit where I'm going to calculate the tax. But if this is not my final profit, what I need to do, I need to adjust the figure to calculate the new amount where I'm going to calculate the tax. So let's have a look. The first one, we can look here. It says the additional information. Very important to understand the additional information. So it says the first one, repair and maintenance, note number 1. So we can see here what is the note number 1 says, 87,200. So they will give us the breakdown of 87,200. So repair and maintenance. Repair made to a new non-current asset. This were necessary to bring it into work condition cost 3,000. So this is my first one. So we have here inside of the repair and maintenance, repair made to a new non-current asset. Very important information here. It says new. So you have to be focused. If we made a repair to the new non-current asset or the new fixed asset, remember that it will not be considered because it is a new asset. We have to add back this cost because the new asset is something that is not used before, and we don't need a repair to the new asset. So it will be treated as a capital expenditure. So this were necessary to bring it working condition of 3,000. So this one is a disallowable expenditure. So disallowable expenditure. When there's a disallowable expenditure, what does that mean? We have to add it back. We have to bring it back and we have to add with the net profit. Because this one I have deducted, but actually I'm not allowed to deduct this one as expense, so I have to add it back. Very important to understand. The next one is the replacement of the window in the office. The old window were wooden single glaze and the new window are aluminum double glaze, cost 18,000. Now this one is allowable. Now let me explain a little bit, because in the exam, you're not going to get the same question. They will make it a little bit left and right to make you confused. So you have to be very clear. Here, if the first one, the repair, do not mention the new word, that was allowable expenditure because this was necessary to bring it into the working condition. But remember, as soon as we see the word new, we know it is a capital expenditure, and capital expenditure is not allowable expenditure for the tax purpose. The next one is the replacement. Now, remember that replacement and the improvement is not the same thing. Replacement means something I replace it to have the new one. But in this question, they made you confused by saying before it was single glaze, now it is double glaze. So they make you a little bit confused, like, oh, you improved it. But remember that here the improvement is done because it was necessary. It was necessary because, for example, if in this country everyone using now the double glaze, and if you have a home with the single glaze, so you have to make it for double glaze to keep the standard. So if you do it because you want to keep the standard, it is a revenue expenditure. It is not capital expenditures. So very important to remember that. Now let's go back to the book quickly and let me show you here what they are saying. Let's look at here. Here they are saying capital expenditure is not allowable, so must be added back if it has been charged in the statement on profit and loss account. This includes any purchase cost of an asset which has incorrectly been charged to the profit and loss, including any associate legal fee, depreciation, and any profit on disposal on fixed asset. So if there's a legal fee, if there's a depreciation, and the profit on disposal, this one we have to add back with the profit. Capital allowance, we need to make sure we deduct it. We'll see later on. The repair expenditure can cause a problem. So let's look at the repair expenditure, what they're saying. Maintaining an asset, example, keeping it in its current condition is allowable. Improving an asset is not allowable, like a capital expenditure. For example, if you have a computer and you have a 2 GB RAM inside of the computer, and for some reason, if you want the performance need to be better, and if you add one more RAM, so you make it 4 GB or 8 GB, then you improve the efficiency. If you do that, it is improvement, it is capital expenditure. But if you just make a repair to keep the standard so that you can use it, it is a revenue expenditure. So you need to make sure the improvement, that means it bring the value of the asset. For example, you have 2-bed house and now you add another additional room. You had 2 bathrooms on the flat, now you add one more. So if you do that, it increased the value of the asset. So if it is increased the value of the asset, it is a capital expenditure. So it is not allowable expenditure. On the other hand, look at this one. However, where a repair is made which bring an asset up to date with what would now be considered industry norm, this is considered to be repair and allowable expenditure. So they are saying here, if this is happen, like you made a repair because you want to bring the asset up to that standard, so it will be considered as industry norm. So that means everyone in the industry, they follow that. If this is the case, it is allowable expenditure. An example of this would be replacing a single glaze window with a double glaze equivalent. So if you do that, that means it is a industry norm. So everyone have the double glaze, you have to do it. For that reason, it is a allowable expenditure. On the other hand, if you look that there are special rules where assets are repaired following acquisition if the repair are to make the asset usable. So for example, if the asset without repairing, you cannot use it anymore. So if this type of repair happen, it is a disallowable expenditure. For example, they are treated as a part of the capital expense. Example, repair to an unworthy ship, so desirable. For example, one of the ship is broken, you cannot use it anymore in the sea, so you make the repair so that it can use again. If this is the case, it is a disallowable expenditure. You cannot treat this one as a repair. It's like a regular repair and maintenance is a allowable expenditure, but not something is completely broke down and you want to do the repair so that you can use it again, is not allowable. If the repair merely improves the appearance of an asset, they're allowable expenditure. For example, refurbishing a cinema. For example, the cinema screen remains same, but for example, you make some repair of the seat, you make some paint. If this is happen, it is allowable expenditure. So the definition here is if you make improvement, and because of the improvement, if it is increased the efficiency of the asset, in this case, it is not allowable expenditure because it is a capital expenditure. But if only change a little bit, or if you do some painting, or if you do some maintenance, just to make the standard of the asset, then it is a repair and maintenance. It will be revenue expenditure and it is a allowable expenditure. Now let's go back to the question and let's have a look. The next point we have. All right, the next point we have here. The next point we have here, that is sales and marketing. Now, the sales and marketing could be allowable expenditure, could be disallowable expenditure. So let's have a look at this one. 1800 on a staff party. There are 8 members of our staff. Remember that the staff party or staff entertainment is always allowable expenditure. So if you make a party, it's a Christmas party or any other party, if you make a staff entertainment, it is allowable expenditure for the tax purpose. But for the gift is a little bit different. Now I want you to stop here a little bit to remember that. So a staff party is allowable, but remember that the client or the customer party is not allowable, so it's disallowable. On the other hand, the gift is a different thing. Now, the gift you can give to the staff, or you can give to your client, or if you can give to your customer. So the rules is a little bit different here. So the gift, if you give to your client or customer, then there is a condition. The condition is it has to be less than 50. Has to be less than 50 pounds per person. And at the same time, the gift cannot be alcohol, cannot be food, cannot be drink, cannot be tobacco. And also it has to be the purpose for the advertisement. So let's have a look quickly for the gift. So let's go back to the book quickly and let's look at the gift. if you come here, we can see the gift. And here we can see the staff entertainment. And it said the staff entertaining is allowable expenditure. So staff entertaining is allowable expenditure, and non-staff, example, customer supplier, is a disallowable expenditure. Remember that entertainment is very clear. Staff entertainment, allowable. Supplier or the customer entertaining is disallowable. On the other hand, gift to the employee is always allowable. So there is no problem for that. Gift to employee or the staff entertaining to employee, allowable. But for the customer, as long as three conditions is met, then it is allowable. What is that three condition? Cost no more than 50 per donee per year. Cannot be 50, more than 50 per donee per year. So in 1 year, if you give two gifts, 50 and 50, so it is disallowable. Has to be total less than 50 for the whole year. Then carry a conspicuous advertisement for the business. So it has to have intention or a motive for the advertising the business. And number 3 are not food, drink, tobacco, or voucher exchangeable for such good. For example, you cannot give a voucher. They can buy some cigarette. They can buy some alcohol. So if these 3 conditions are fulfilled, then gift to the customer will be allowable. On the other hand, give to a small local charity if they benefit the trade. Now, local charity is very important. In the exam, they will tell you gift to or donation to the national charity. Remember that. The national charity is not allowable. So you need to remember that. All other gifts include the disallowable. See that? All other gifts include donation to national charity and the QCD. Now, QCD have a different calculation, qualified charitable donation. First, we add back. Later on, we take some advantage for the tax saving. But for the time being, understand, except the gift to local charity, any other donation like a national charity is disallowable. In the exam, it's very common, the national charity and the gift to the or donation to the local charity. You have to remember that local one is allowable, but the national charity is disallowable. All right, so let's go back to our question and let's have a look. All right, the next one we have here, the motor expense. So the motor expense include 2,000 lease cost for a car with CO2 45 gram. This car is used 50% by the sales director. Now, lease car cost is always allowable expenditure as long as they're under 50 gram. So for example, if I want to show you the detail, the lease car, you can see here. So we have the lease car here, and you can see 15% of the leasing cost of the car CO2 emission excess of 50 grams. So if the car is more than 50 grams, we have to multiply by 15% and you have to add back because 15% is disallowable. But if it is less than 50 grams, the whole amount will be allowable. All the car lease cost will be allowable. So regardless, it is a sales director or used by the personnel, 50% regardless. Remember that when you talk about the company, in company, we never restricted the allowance. When you do the capital allowance, you're going to look at in detail. We never make a restriction for the allowance for the company. But if it is a sole trader or if it is a partnership, the private use and the business use, we have to split. So if someone use 50% for the business or 50% for the personal, we have to split it between 50 and 50. But if it is for the company, we really don't have to split it. So the whole amount will be acceptable. The next one we have is speeding and parking fine, 2,400 incurred by the sales director while on business journey. Now remember that this is a little bit tricky. The fine. Fine is a disallowable expense for the owner. If it is a sole trader or if it is a partnership, if the fine is incurred by the owner of the business, we have to add back. It is a disallowable expense. Same thing for the company if it is happened by the director. But only one exception. We have to remember that if the fine is incurred by the employee, so if the employee have a fine, then it is allowable expenditure. So let's have a look quickly. So if you go to the fine, we can see here, this is our first box. So the fine, it says fine and penalties. HMRC usually allow parking fine incurred in parking an employee's car on the employer business. So if it is employee, if the employee have a fine, then it is allowable expenditure. Fines relating to the owner of the business are, however, never allowable or never allowed. So owner means the sole trader business. Similarly, the same way, a company would not be able to deduct fine relating to the director. So if the director have a fine, we are not allowed to deduct that fine. So you have to be very careful. If it is a sole trader, then owner have a fine, we need to add back because it is disallowable expenditure. Same way, if we have a director of the company, the fine are disallowable. Only if the employee on the company, if they have some fine, it is allowable. So you need to remember that. All right, so the next one we have here, number 4, the capital allowance. Capital allowance, all we have to do, we have to minus it. So we have to remember that once we have a capital allowance, so we have here 5,300, all we have to do, we have to minus it. That's all you need to do. So let's have a look now. So let's complete this one. The first one, we have depreciation. For the depreciation, you really don't have to think. All you have to do, you have to look at the depreciation, you add back. Remember that some depreciation or amortization could be allowable expenditure, but it will not be tested for your AAT exam, so you really don't have to worry about it. So as soon as you see the depreciation, all you have to do, you have to add back the depreciation. Depreciation is a non-cash item. So business show the depreciation as expense against the non-current asset on the balance sheet. So because of the depreciation, business never paid any actual expenditure from the bank. For that reason, the depreciation has to be added back. Also, the depreciation can be manipulated. For example, there is no rules for the depreciation, what type of depreciation policy business needs to use, and how much is the depreciation percentage business needs to use. So the depreciation is basically something on the hand of the director of the business. So they can show 10% straight line, 20% reducing balance. So they can manipulate the account with the depreciation. For that reason, depreciation need to be added back in order to pay more tax. All right, let's have a look and complete this one quickly. The first one, as I said, we have to add back the depreciation. Depreciation is 2,156. So this will be our first one, 2,156. So 2,156 depreciation. The next one is a repair to the new asset. As I said, the new asset repair has to be added back. It is a capital expenditure. Remember the word new. If there is a new, we need to add back. If there is no new, old asset, allowable. So 3,000, we need to add back. The next one is the replacement of the window. Remember that. I'm replacing with the single glass to double glass because I want to bring the standard to the industry norm. That means this is required. So I'm just following the standard. If I do that, it is allowable expenditures. Don't have to do anything. So just write 0. The next one is staff party. Just close your eyes. As soon as you see the staff is allowable. Either staff entertaining, either staff party, gift to the staff is allowable. Then client gift, no, the client gift is not allowable, and as long as these 3 conditions not met, if you remember the 3 conditions, it has to be less than 50 per client per year, and it has to be the purpose for the advertising of the company, and also it cannot be the drink, tobacco, or any voucher that can be exchanged for this type of goods. So I need to add 2000 back. Then we have a lease car. The car is less than 50 gram. The whole amount will be acceptable. So we don't have to write anything. 0. Fine. The fine has to be added back because it's not the employee, it's the director. So 2400 need to add back. And the next one, we have a capital allowance. Capital allowance always need to minus. So need to minus the capital allowance, minus 5300. Do not forget to enter the minus or the bracket sign. Obviously, otherwise it will give you the wrong figure. Remember that in the exam, you have to make sure you read the requirement very carefully, because in the exam, there is a possibility the question can ask you different way. So obviously, if the question asks you different way, for example, write this one like make it, for example, um, uh, make it balance, make it like round up, round down. Very important to remember that, like how to make it round up or round down. Or if they ask you, like, make sure you and put the minus before any of the transaction. If it's a negative, you have to follow that. So once you do that, it will give you the total figure here. So the taxable trading profit here is 221998. So what you can do here, what you can see here, first our accounting profit was 217742. So the accounting profit means the profit came from the profit and loss account, from the accounts based on the accrual concept. But we're not going to pay the tax on that amount. Our tax will be calculated based on 221998 on this amount. So it's very important to do all the adjustment and remember that. So this is our first one for a company. Now we're going to open the practice assessment 2, where we're going to look at the same question, but this time we're going to look for the sole trader. So let's have a look. So you're going to open this question for the sole trader. We have one little question for the 2 marks. Let's quickly do that. And obviously it's very simple. It's for the revenue or the capital expenditure. So let's have a look at this one. It says this task is about adjusting the accounting profit and loss for the tax purpose. Okay, so let's have a look at that. So we have here, it says a business spent 800 renewing a 65 years lease. This is a capital expenditure, true or false? Now remember that if we have a lease for the long term, and if we spend even £100 for the surveyor fee or for renewing the lease or anything is relevant to the capital expenditure, that will be part of that. For example, if you buy an asset, and even if we pay £20 delivery cost, this delivery cost will be part of the capital expenditure. So even though the amount is very less, £800, but why we spend it? Renewing the lease. So long-term lease, 65 years. So definitely it is a part of the capital expenditure. So we'll say it's true. Question can ask you for the franchise. Question can ask you for other sort of capital expenditure. For example, the surveyor fee. Remember that this sort of expense could be very small, little, but it is still a capital expenditure. The next one is says if a sole trader chooses to use the cash basis of accounting, their accounting profit will always be the same, the taxable profit. And that's not true. That's not true. If a sole trader chooses to use the cash basis of accounting, their accounting profit will be always same, the taxable profit. Now, obviously, the cash basis means like when you actually pay the cash. Now, it doesn't matter you pay the cash or if the transaction happened and you just record it based on the accrual concept. The difference between the accrual concept and the cash basis is like accrual concept not relevant to the cash. Either you paid or not, either you receive from the supplier or from the customer or not, you still have to record it. But the cash basis means like I'll only record if I paid to my supplier, I'll only record if I receive from my supplier. If this is the case, remember that still we need to do the adjustment. Doesn't matter like what basis I follow, it's not necessary my accounting profit and the taxable profit will be same. You still need to make the adjustment anyway. All right, so let's come to our main question, where you're going to look at our adjustment. So here you can see the name Sunita. So as soon as you see the name of the person, you need to understand this is a sole trader business, because we are not saying here the company, we are saying the name of the person. So name of the person represent it is a sole trader business. So Sunita ran a small building business. She has opted to use the accrual basis of accounting, has made an accounting profit of 84,000 for the year. So 84,000 is the profit, basically based on our profit and loss account. This accounts include a depreciation charge 1,200. This accounts include a depreciation charge 1,200. So this one we need to add back. So you already know this one. If there's a depreciation, we don't have to even think. So we need to say add back, because it is a disallowable expenditure. It is a non-cash expense. Business never spend this money for a expenditure. For the fixed asset, you always claim the capital allowance. So you cannot claim this one as expense. A gain on disposal of an asset. Remember that this 600 we need to deduct. So deduct. Why we need to deduct? If you see the word disposal, remember that it is not a sale. Disposal means when I sell a fixed asset. For example, let's say my business is to sell the pen. So when I sell the pen, I called it sell. But for example, one of my computer I need to replace. So I have a car, I have a computer, I want to change it. So I want to sell the old one. So if I sell the computer, if I sell the car, I called it disposal, because by selling the car is not my main business. My business is to sell the pen. So when I sell the pen, I call it sell. But if I sell any of my fixed asset like a computer or car or furniture, I call it disposal, so that I can find the difference. Sell means selling. The pen is the business. If I'm the business, for example, if I'm a Dell company, or if I'm a Lenovo, or if I'm a, for example, any computer brand, then when I sell the computer, I call it sell. But I'm selling a pen. So for me, when I sell the computer, is a disposal, is a fixed asset for me. That is that I buy with the intention to use it in the business, but not to sell. So if this is the case, we called it disposal. Now, this money came from by selling a fixed asset. So it's not my regular income. This money didn't came by selling the pen. This money came by selling the fixed asset. So fixed asset will give me the capital gain. So it's not my revenue gain. I don't have to pay the corporation tax the way I will calculate here, because this one is a capital asset. It will give me a capital gain. For that reason, I have to minus it, because this income, this capital asset 600, never raise from my regular income. So very important to understand it. The regular income represent that come from the regular sale. For example, if I sell the pen, that means this pen is my regular income. So it is a sell, it is a regular income. So we need to be very much clear here. If we have a disposal, that means I have sold the fixed asset. So fixed asset will not be counted. So you need to deduct it. It's not my regular income, not my regular profit. I need to minus it. A salary of 20,000 for Sunita. Another important point. Remember that Sunita is the owner of the business. She cannot take the salary. Remember that Sunita is the business. It is a sole trader business. That means there is no limited company, and she is not allowed to take a salary from the business. If she take any money from the business, it will be the drawings. Remember that. So we cannot show this one as expense. Her salary cannot be treated as expense because she is the business. It's a sole trader business. Remember that. It's not a limited company. If it is a sole trader or partnership, if they take any salary, this salary has to be added back. So you need to find how much was the actual profit before take the salary, because the tax need to be calculated on that amount. So here we have a salary 20,000. So this one need to be add back. So add back the salary. The next one, salary of 16,000 each for 4 builders. So there are 4 builders, and each of them, they take the salary of 16,000. One of these builder is Sunita husband. Remember that here, 4 builder, and all of them they're taking 16,000 each. That means Sunita is not giving any favor to the husband. It's not like all of them they're working same and all of them they're taking 16, but Sunita's husband taking 20 because he's the husband of the owner and he's getting some advantage. No, if this is the case, we need to add back the whole amount, the difference between 20 and 16, 4,000 need to be added back. But if everyone is receiving 16, and if the husband receiving 16 because he's working as an employee, that's allowable. So you don't have to do anything. So I will say like this one, 16,000, we really don't have to do anything. So it's allowable. And then the next one, lease cost 3,000. And this time the car is more than 50 gram. So remember the car, if it is more than 50 gram, we have to take back 15%. If you remember the table, so we have 3,000 multiply 15%, 450. So 3,000 multiply 15%. It's 450. Remember that if the car have a CO2 emission more than 50 gram, 15% of the lease car cost has to be added back as a desirable expenditure. So 450 need to be added back because it is disallowable. The next one is says during the year, she took some good from the inventory which had a cost 800, okay, and had a resellable value, the selling price. So selling value was 1,000. No entries were made in the accounts on the removal of the inventory. Now it is very common in the exam. So they will tell you the owner of the business, she took some money or sometimes she took some goods inventory from the business and the cost is 800 and the selling price is 1,000. So how much you're going to add back? How much you're going to adjust? Now this is a little bit tricky. Why? Because normally we know according to the IS2, inventory should be valued at a lower of cost and the net realizable value. So far we learned the IS said inventory should be valued at lower of cost and the net realizable value. But here you can see the cost is 800 and the selling price is 200. So that means there is a profit here, 200. There is a profit here, 200. So what will be the journal for that? So the journal here will be the inventory need to be go because inventory cannot value more than cost. So what will happen? My drawings, if owner take anything, either the cash or the goods, if the owner withdraw anything from the business, we call it drawings. So drawings will be 800 debit. At the same time, the inventory or the stock 800 will be credit. That means my drawings will increase, my capital will go down. Drawings is the opposite of the capital. So my investment, my money I have invested in the business, it will go down. My inventory will go down by 800. Normally the inventory is a debit. If I make it credit, it will go down. At the same time, my profit and loss account will be credit by 200. So you can see here, the drawings will be down by 1,000 now, not 800, actually 1,000. And this 1,000 will be the combination of two credit, 1,000. So my capital will go down by 1,000. And my inventory will go down by 800 and the profit and loss will be increased by 200 because you have to consider with the profit. That means the 1,000 will be the drawings, not 800. Very careful. So you take the selling price. Very, very important to remember that do not take the cost here. The cost will have impact on the inventory, not here. All right, so let's complete this one quickly. The depreciation need to add back. So 1,200, very simple. Gain on disposal, 600 deductible because this money came from another source by selling the fixed asset. So this money didn't came from my regular selling business. So I need to deduct it. So I'm not going to pay the tax right now here. So 600 deductible. Salaries I need to add back only for Sunita, only for the sole trader. Goods taken from the inventory, 1000 need to be added back. The selling price, car release, we have calculated 450, 15%, 450. And the capital allowance, all is simple. Capital allowance, we need to minus. So capital allowance minus, and that gives me 97,850. So this will be the profit where I'm going to pay the tax on. Very important. This question will be your first question in the exam, either the limited company or either for the sole trader. All you have to do, you have to revise very well or read all the boxes, which one is allowable, which one is not, make a note. And this question will be very easy for you in the exam. If you know all of this thing, you just need a few minutes to complete this question number 1. Now we're going to move to our task 2. And there we're going to look at another important question, that is capital allowance. So let's start with the task 2 now. The task 2 will be the capital allowance. Very important question you have to look at. So let's look at assessment 1 first. Then we'll come back to assessment 2. Okay. So let's read the question first. It says this task for 12 marks. So it will be exactly the same task you're going to see in the exam. And it says this task is about the capital allowance. Now let's talk a little bit about the capital allowance. So if you will be working as an accountant, at that time you will have this all this calculation built in on your software. For example, either you use the Irish element, either you use the TaxCal or Sage, any sort of like accounting software you use, you will see the capital allowance calculation already there. All you have to do, you have to say this is the plant and machinery. This one is eligible for the AIA. This is a car with zero emission. This one is eligible for FUIA. This one is the private used asset. This one is eligible for the special rate pool. So what will happen if you just say that on the right box, on the right column, rest of the calculation, the software will do automatically. So the capital allowance basically we are giving on the fixed asset rather than claiming the whole expense on the first year. We are breaking down through the written down allowance and we claiming 18% every year. So it will be done automatically when you have a fixed asset and you have a software link with that. Once you need to do, the first time you have to enter the information, and every year if you just carry it forward the balance, it will do for you automatically. So in real life, in the working life, it will be more easier than calculating the exam. So let's have a look. So we have here the capital allowance. This task is about 1 to C. For the Robert, Robert is a sole trader. Very important to understand that. Sole trader, remember that if it is a sole trader, there is a restriction for Robert. If there is a sole trader, then we can only claim the allowance for the business portion. We are not allowed to claim for the private use. If it is a limited company, ignore that. If it is a company, we can claim the 100% allowance, regardless who is that person, the director or the employee. But if it is a sole trader, we are restricted for the allowance. Careful with that. Has always used on the accrual basis, okay? 1st July 2023, he had the following brought forward tax written down value. So TWDV for the opening balance. So it will be always given in the exam. And very careful with the date, because sometimes the counting period can be more than 12 months. So very, very careful with that. So we have opening balance, that is for the GP, for the general pool, 86,742. It is the opening balance and it will be already in the box. When you come to the table, you will see this general pool balance, 86,742 already there. And also the Robert car, 24,382. This is also opening balance. So these two are opening balance, balance BD for the tax written down value for the general pool and for the Robot car. Now, for example, the Robot car had CO2 emission 170 gram and had 45% use for the personal. Now this one we can understand here. We have a CO2 emission more than 50 gram. And if it is more than 50 gram, normally it will be treated as a either a special rate or on the private use asset. When you're going to look at the box, you will see this asset is showing on the private use asset because 45% is used for the personal reason. Now I'll show you on the book how to understand where the car valuation will go. For example, if a car have a CO2 0 gram, so that means it is eligible for the FYA. If it is less than 50, then it will be treated as a general pool. More than 50 special rate, or with the private use, then it will go to the private use asset. You have to be very careful with this for definition because in the exam, you will definitely see the car, no doubt. During the year ended 30 of June 2024, the following transaction took place. So here, year ended 30 June. So it started 1st July to 30 June. We are very clear with the year. The reason it is important because if it is more than 12 months, it's July to June, so we are 12 months. If it is more than 12 months, the WDA allowance, the FYA allowance, and the AYAA annual investment allowance, all this allowance has to be expanded. So it will be adjusted through the period. If it is 12 months, 12 months. If it is less than 12 months, we have to divide by 12, multiply by 9, or multiply by 6. Depends how long is the counting period. If it is more than 12 months, we have to increase it. For example, divide by 12, multiply by 16 or 18, make it extended. Very important. So you need to understand that very clearly. Then we have some addition. What addition we have? We have 1st of January, electric car. Now remember that electric car will have no CO2. It's a zero emission. As soon as you see the electric car, you understand it is a zero CO2. And 45% personal use used by robot. Again, we have to make sure. So 55% will be allowable. So if 45% is the personal use, that means 55% is the business use. And we can only use for the business use portion because he's a sole trader. And 55% allowance we can claim for that car. So you need to do 32,800 multiplied by 55%. 14th of March 24, plant 112,000. Plant is eligible for AIA, and this one is eligible for FYA, first year allowance, and annual investment allowance. This one have a limit. We need to look at that one. 15 June 2024, a car CO2 82 gram, that is more than 50 gram, 65% used by James, the production manager. So this one, we need to see. This one is more than 50 gram. So we need to see where you're going to put. This is 18,900. So it will be the special rate. More than 50 gram, special rate. And the disposal. So you have a plant disposal, 31st October 23. So this one will be from the GP, general pool, and the robot car. Now this one you have to be very careful. Robot have two car. One is 45 electric car, and the first one was robot car, that was 170. They give this information intentionally. So that means this one is sold here, not the electric car. So we need to remove this one, 24,382, and we have to minus 12,900, and that will give us the balancing charge. Because if we dispose the asset is no more. So this is the story a little bit, we understand it. Now, before we start, I want to go through a few things, some rules, so that we can refresh our memory a little bit. So let's go back quickly to the capital allowance and just quickly look at a few things from here. Okay. So we have here, the first one is the plant and machinery. Now, the definition of the plant and machinery, I don't have to really explain. So all you have to remember, if something is movable, is a plant And if something is not movable, it is not the plant. I'll go through a little bit, but for the time being, just understand that. So capital and revenue, I'm sure we know this one, the what is the capital expenditure, what is revenue expenditure. So let's look at the capital allowance calculation. That's the main focus here. The first one we have here, full expense, FYA at 100%. If I have a car, CO2 0 gram, that is eligible for the FYA, first year allowance. Remember that the first year allowance, we don't have to make the time a portion. So no time a portion. So you don't have to make like 6 months, 9 months. So if the counting period is 12 months, if the counting period is 18 months or 5 months, doesn't matter for FYA. FYA will be fully claimed if we have a CO2 0 gram electric car. The next one is if we have a car less than 50 gram, it will go to the GP, general pool, that I have discussed, and only get the WDA, written down allowance, no IA. Remember that AIA is only eligible for the plant and machinery. CO2 more than 50 gram, it will go to the special rate, and this time the WDA will be 6%. That's the special rate. So if it is less than 50 gram, general pool 18%, more than 50 gram special rate 6%, and this one has to be time apportioned. So AIA, then WDA, this type of allowance, we need to be adjusted with the time apportion. Then you have a private use asset. We need to look this one. So restricted relief and sole trader only. So sole trader only. If there is a sole trader, then we have a restricted relief the way we're doing for the robot. So if there is a business and private, we can only claim for the business portion, not for the private. All right, so the next one we have here, they're saying for the pool, so pool balance on balancing charge only, separate asset balancing charge allowance. So I'll discuss that. So what happens if we sell the asset? So if we sell an asset, either it could create a balancing charge or allowance. Now, balancing charge means, for example, if I sell something more than the cost value means more than the written down tax written down value. For example, if we have a opening tax written down value 5,000, and if I sell for 6,000, so I make a profit. So if I make a profit 1,000, that is called balancing charge. So I need to pay tax on this 1,000. And if I sell less than the cost, that create the balancing allowance, that is a tax allowable expense. So we need to look at that later on. Then we have some building structure allowance we're going to look at later on this one. Our focus is right now for the capital allowance. So let's go inside and let's go a little bit in detail before we start the robot question. So first one, I like to start with the annual investment allowance, that is 1 million. Let's quickly go through a few things. Annual investment allowance is 1 million for the whole year for the 12-month period. So on plant and machinery. So if we have more than 1 million, the remaining balance will move to the general pool. For example, on the first box, if we have a plant and machinery, for example, 2 million. So that means I can minus 1 million for the annual exemption, annual investment allowance, and the remaining balance will move to the general pool. So 1 million will be deducted and another 1 million will be moved to the general pool. So very important. If the time is more or long, we have to make sure we make it a scale up or down. All right, company cannot have a corporation tax more than 12-month period. We know that anyway. All right, so AIA is not available expenditure on car. AIA is only available on the plant and machinery. Okay. Now let's look at the next one. The next one we have here, FYA, first year allowance. Now the first year allowance is very easy to remember because it's only for the zero emission car. So if you have a car that have a zero emission, or in the exam, they might tell you the electric car. They don't have to tell you zero emission car. They can tell you it's a electric car. As soon as you see that electric car, you understand it's a zero emission, and you can give the full first year allowance. You really don't have to think about like the time apportion. So never time apportion for the shorter or longer accounting period. The next one is the common allowance, WDA, written down allowance. This one we give 18% per year. If we have a plant and machinery, 6% for the special rate pool. What is special rate pool? More than 50 gram of the CO2. All right, so let's have a look. The next one. The next one we have the important point here. We have, okay, disposal. So let's look at this one. It's important. If we sold a car, when an asset is sold in the year, we deduct proceed from the tax written down value of the pool brought forward. Note that zero emission car on which have a 100% FYA was claimed is sold. The proceed are deduct from the general pool. The proceed deduct will usually be proceed received on the sale of the asset. However, if an asset is sold for more than its original cost, we only deduct the original cost from the pool. So what they're trying to say here, sometimes we can sell the asset more than the cost, sometimes less than the cost. So if this is the case, if we sell less than the cost, we only deduct the original cost. Let's have a look. One example. On 6th of April 2024, a sole trader who prepared account using the accrual basis had a balance on their general pool 47. So general pool is the combination of all the asset we have there. We don't know how many asset we have here. Plant that had a cost 7,000 was sold in the year for proceed of. So we have a plant, the original cost was 7, and that is inside of this tax written down value on the pool. So we sold it for 14 and 4. So A and B. What happened if we sold it for 14? Now, if we sold for 14, my cost was 7. So that means I sold more than my cost. So it's very simple. If the proceeds are more than the original cost, so only 7,000 will be deducted from the general pool. So my cost was 7, and I only deduct 7, not 14. If the actual proceeds are less than the original cost, look at this one. So I had a cost 7, but I sold it for only 4,000, number B, then I'm going to minus 4, not 7. Why? Because HMRs, of course, want to take the advantage on their side. Because if I minus 7 from here, from the pool, what will happen? I will have a less balance. And if I seize the business, if I close the asset, it could create the more balancing charge. And obviously, I need to pay the tax on balancing charge. So if I sold it more than 7, I can only minus 7. But if I sell less than 7, I can only minus the proceed value. This is the explanation. But anyway, it's not very common in the exam. Don't have to worry too much, but you can practice a little bit anyway. So period that are not 12 months, you know how to make it up and down. So basically divide by 12, multiply by 9 for the allowance. If it is 9 months, divide by 12, multiply by 6 if it is for 6 months. The FIA never adjusted, fair enough. We don't have to adjust for the FIA. And then what else we have here? Balancing allowance, balancing charge, we explained that already. So the business could be closed, and that time only balancing charge and balancing allowance will be created. The asset that are not included in the general pool, this is a very important one. So if any asset not included on the GP, for example, for some reason, if it's more than 50 gram, the car CO2, so it will go to the special rate. And if it is used by the private sole trader, then it will go to the private asset. So it says, we have seen above how to compute a capital allowance on the general pool of plant and machinery. However, some special items are not put into general pool. A separate record of allowance must be kept of the asset. Okay, what type of asset are those? So this asset are car with CO2 emission greater than 50 gram. So 0 gram FYA, less than 50 general pool, more than 50 special rate. And a special rate, if it is private use, then it will go to the private use asset. Asset not wholly used for business purpose in unincorporated business. Unincorporated business means sole trader, such as car with a private use by the Proprietor. Proprietor means the owner of the business. So that means we'll have another column is called private use asset. Very important. All right, so then we have a spatial rate, some of the explanation. So this is the private use asset. Asset used partly for the private purpose. If a proprietor of a sole trader business or a partner in a partnership business use a business asset for the private purpose, the following treatment apply. The asset is put in a separate column. The tax written down value is reduced by the full amount of AIA, FYA, WDA calculated as normal. Balancing allowance or balancing charge arise at the date of disposal. So if I sell this asset, the private use asset, I have to create the balancing allowance or the balancing charge. Only the business proportion will be the allowance, can be moved to the allowance column. And we refer this to as a private use asset. Okay. A asset with some private use by an employee, not the business owner, suffer no restriction. So if there is employee, no restriction, the whole allowance can be claimed. So the employee may be taxed on the private use as a taxable benefit, but the business is entitled for the full taxable allowance. So fair enough, we understand that. All right, so now let's go back to this is unincorporated. So the next one is also important. Quickly have a look this one. It's a full expensing for the business. That's the new one. So we never had before with the AQA 16 syllabus. That's with started with AQA 2022. We have seen that business can claim 100% of the first year allowance on zero emission car. We have also seen that business can claim an annual investment allowance 1 million to relieve expenditure on plant and machinery in the year of the purchase. A relief known as full expense is also new, is available to companies for the expenditure, only for the companies, not for the sole trader. So it's very important to remember that. So the full expense is only for companies. The rate is 100% for an asset in the main pool and 50% for the asset in the special route. Now this one will not be coming in the exam. So 50% for an asset in the special rate. So it will not be treated in the exam, 50% for the special rate. So 50% FY is not examinable. So available to companies only, not the sole trader or partnership, available only to new plant and machinery, new plant and machinery. If the question said like the old asset, remember that this asset cannot be eligible for the full expensing and not available on car, only for the plant and machinery. So new plant and machinery, new. When an asset has a fully expense is disposed of, there is a balancing charge equal to the disposal value. So how much you sold it for? This will be equal to the balancing charge. For example, if this is very important to understand actually. So when you have an asset, for example, £10,000 we have expended, and if we claim £10,000 allowance, but next year if I sell the asset, I'll get some money, so that will create the whole amount balancing charge. I have to pay tax on it. When an asset which has been relieved using the AIA is sold, the disposal value is deducted from the pool. Okay, therefore it is generally preferable to use AIA rather than the full expensing. When a new asset qualifies for either allowance because the AIA avoid the balancing charge or disposal. When we'll go back to the question, I'll explain in detail a little bit. So let's go back to the question. Okay, now let's go back to the question to see what we have here. So the first one we can see here, we have already explained the question. Let's start with that question. And we're going to do one by one. So the first one we have here, the 12-month is clear. That's not a problem for us. So the general pool you can see here, 86,742 is already here, 86,742. And the 24,382, the opening balance will be in the exam as well. Now you can see here this one on the private use asset, because this asset used by the robot, and this asset have a CO2 more than 50 gram, that is 170, and 45% personal use. So you can understand it will go to the private use asset. Remember that the private use asset and the special rate is not the same thing. So the special rate is more than 50 gram, but not used by the private purpose. The private use asset is more than 50, but used for the private as well. So you need to remember that. Okay, let's try this one. The first one, we have a addition, a general pool, and after that, we have 1st of January electric car. So 45% personal. So that means 55% is the business. 32,800. So let's write it down. The first one, electric car. So AC, electric car, and that was 32,800. And we multiply with 55% because we are taking 55%. So this car is eligible for FYA, first year allowance. So we do 32,800 multiply 55%. So 18040. This is our first one. The next addition we have the plant, 14th of March. So write it down, the plant. Now, the best way you can do what, because you can write all the addition and you can make the disposal, or you can make the allowance right now. You don't have to do later on. So you can do the addition at the same time you can do the allowance. So I prefer that because you're not going to miss anything. So FYA, first year allowance, electric car, so whole amount will be allowance. So I can say FYA allowance, FYA, and we can make it just minus 18040. So this is gone. So remember that whole amount is the allowance. Write the same amount, 180 and 40. So this is gone. So we have electric car. I claim the whole allowance. So the first one is done. The next one, we have the plant. And we know the plant is eligible for the AIA up to 1 million. If there's a difference, it will go to the general pool. So how much is the plant? 112,000. So 112,000. 30. And immediately I claim the AIA, annual investment allowance. Claim that minus 112,000. So this is also my full allowance, 112. So this is all gone. So both are gone. So the next one we have here, that is the production manager car, and that is like kind of more than 50 grams. It's 82 and 60% used by the personal. So it's used by the gym. So let's go to the PM car, production manager car. So it will go to the special rate pool. So we have here 18,900. So this one, the production manager is the employee. So remember that we had before the robot is the owner. So it will come to the private use asset for the robot. But for the PM car, for the production manager, you can see here is also 65% used by the GEMS, so by the production manager. But obviously it is more than 50 grams. It will go to the special rate, not for the private use. But if it is a robot, it will go to the private use asset. So 18,900. So we have this one. What else? That's all. Now we have a disposal. The first disposal, we have a plant from the general pool. So write it down, disposal. So disposal. Even if you make something like up and down, you don't have to follow the serial. You still get the full marks if all the calculations are correct. So the disposal, we have a plant from the general pool, minus 8,600. And also we have a disposal of the car, the robot car. This one, 12,900. That's the first car he had, 170 grams for 45. So that's the private use car. So we sold it for 12,900. And that's all. So after that, we make the total. Let's find what is the total we have. So on the total, this one will be 0. This one will be 0. General pool 86 minus 86,742 minus 8,600. That gives me 78,142. If there is a pence, remember that round it up. If it is more than 0.5, and this one is same 18,900. And then the private use, we have a balance. So 24,382 minus 24,382 minus 12,900, that 11,482. And my allowance so far total, how much is the total allowance? So far we have 112,040 plus 18040. That gives me 130040. All right. Now we need to look at our next thing. The next thing we have here, the balancing adjustment. Because this car, the private use car, if you remember from the books, if you have a private use car and if you sell it, then it will create the balancing charge or the balancing allowance. So let's quickly go 1 second. Let me show you if I can find that. All right, so and here it's very important to make all this note because it's not going to be easy to remember everything. Okay, so I'll show you maybe later. Let's go to that and quickly finish that. If we have this one, private use asset, and if we dispose it, because the asset is gone, either it will create the balancing allowance or the balancing charge. Now the tax written down value was 24 and we sold it for only 12. That means obviously, like you understand, we sold it less than the cost. So if we sold less than the cost, we are not making any profit. And if we're not making any profit, we're not going to pay any tax. So it's very important to understand that. But the allowance we need to claim. So here we have 11,482. This one we have the difference. And from here we can only claim the allowance for the business portion. So let's have a look. So we said the balancing adjustment. So we have 11,482 multiply 55%, because 45% was for the personal, so the business should be 55. So 11,482 multiply 55%, and that gives me 6,315. So 6,315. So this asset need to go because we sold it. This asset not anymore with me, and the allowance will be 6,315.1. So just round it down, 6,315. All right, so we have done everything. Now we can calculate our WDA. So WDA will have two. One is 18% and one is 6%. 18% for the general pool and 6% for the special rate. So general pool, we have 78,000. So 78,142 multiply 18%, and that gives me minus 14066, because it was 65.56. So make it round up, 66. So this is our allowance. Allowance is always minus, remember that. This one, 18,900 multiply 6%. So 1134. So minus 1134. And if you added this two, that should be the total allowance. So 14066. And that gives me 14,066 plus 1134, 15,200. All right, and that's all. So we need to now find how much is the closing balance. So let's try to find the closing. So carried forward written down balance. So you need to just minus 78,142 minus 14,066. That is 64,076. 64,076. And this one 18,900 minus 1,134. And that gives you 17766. This one have nothing, and this one is a total allowance. So we have 130040 plus 6315 plus 15,200, and that's 151,555. And that's it. So that's how we'll get the full marks on this question. So yeah, that's not the plant and machinery. So basically, this is our capital allowance question. So if you do this way, for example, first you do the FIA, remove the FIA, AIA, remove the AIA, then make the disposal. Be careful with the private use because you have to only give the private portion half of the what is relevant to the business. If it is sole trader, so you have to remember that. If it is on business, the limited company, don't worry about that. Only the sole trader have a restriction. Have to be very careful. All right, so more or less, this is our capital allowance. So let's move to the next one, the assessment 2, and let's have a look at the capital allowance from here. So that's gonna be easier for us to understand if we do two questions. So let's have a look at this one, company X. This time we have a company. Before it was a robot, now we have a company, and the company means the limited company. So let's have a look at this one. Company X prepare accounts for 16 months. So very important. If you understand the accounting period more than 12 months, you have to make a note for that because you have to split it. So for the first 12 months and for the next 4 months, because 16-month company cannot prepare the tax return. Company accounting period can be 16 months. But company tax return for the corporation tax or the tax calculation, it cannot be more than 12. It has to be maximum 12. So first we do first 12, then the remaining months. So if it is 18 months, then do 12, 6. If it is 16 months, 12 and 4. So we need to split it, very important. So ending on February, from February, we have to go back 16 months, then take the first 12, then we take the 4. The following information is available, tax written down value at November. So 1st November, so they give it to us, starting value, opening value, 1st November 2023. So if it is the opening balance, so my next November, 1st November 2024, next year it will be 12 months, and then I'll take 4 months. Very simple. So you have opening balance, 156, and a special rate pool, 82. So this will be given on the box anyway for us because it's opening balance. Let's look at the addition. So what addition we have? So we have 1st January 2024 car with 165. So more than 50 grams. It's not the general pool, it's special rate because no private use. So it will go to the special rate pool. So we understand 60,000 will go to special rate. It's no private use. 8th of October, remember that in the exam, they might give you a column for the private use, but if you don't need it, just keep it empty. You don't have to use it. 8 October 2024, plant will be used in the business for 10 years and sold for 50. That's the plan, 400,000. We have a allowance for 1 million, so we can easily use it. 15 January, car with 35 grams. So this one is less than 50 and 60% private use by the production manager. So that will go to the GP, general pool, because 24,000 we have purchased. So that one basically more than 0 gram and less than 50. So it will go to the general pool. And as I said, it is not a sole trader. So it is a limited company. So everything will be with the special route. You really don't have to follow the owner the way we did before for the private use column. So you really don't need to use the private asset use column for the company at all. All right, so we have electric car disposal. Only one car is sold. So electric car, CO2, 50, private use by the sales manager. Now you can see here, we don't have the car here, so we don't see like any addition for the electric car, but we sold it. That means it will be removed from the general pool. Very careful with that. If we have a electric car, what does that mean? That means this car, when I purchased, for example, last year or 2 years before, when I buy this car, I already claimed the FYA. So if I already claimed the 100% FYA, that is first year allowance, that means this year, obviously, like I'm just selling. So anything I'm selling, I'm getting the money. So this, if disposal need to be removed from the general pool, because this asset, I already claimed the full allowance, so I don't have any column for that electric car, because electric car, as soon as I buy, the same year I claim 100% allowance. So if I sell after 2-3 years, the same asset, I need to minus from the general pool, because I don't have this asset balance on my column anymore. All right, so company X will make claim for the capital allowance, which bring the most benefit to the company, current and the future period. Fair enough. So we understand everything we have here. All you have to remember here, this asset we have for the PM, for the production manager, 24,000, we buy in January. So that means we have a year, November 23, so to November 24, so that's the 12 month. And then the January 25 is basically the next period. So it will be on the next 4 month. So on the 12 month, I have this two, and this 4 month, I have the PM. And the May 24, this one is also on the 12 month. Very important to split it. Otherwise, you will make a mistake on the exam. All right, let's have a look now. Let's do this one. Start with the first one. So we have the opening balance will be always given in the exam. The next one we have here, the first one, the car CO2 165, no private use. So it will go to our special route, because more than 50 gram go to special rate. So we said car CO2 165 gram and a special route, special rate under the 82,000, it will be 60. The first one is gone. The next one, we have a plant also buy during the 12 month. So 400,000. So it's a plant PLA plant 400,000 eligible for AIA. As soon as you have it, you remove it. So just write the AIA and make it gone, so that you don't forget that it's gone. And let's come to the allowance column. So 400,000 total allowance. All right, the next one we have here, and that is this one, 15th of January, this for the next period. So I'll not do it now, because the tax return and value you can see here, 1st of November. I want to make a separate for next 4 months. So I'm doing for the 12 month. Otherwise, the calculation will be wrong. So we're done here. Then we do the disposal. We have one disposal during the year, 16th of May. That's with the 12 month. So it's a disposal. And the disposal is 8,600. As for the electric car, as I said, if you see the disposal of electric car, definitely from the general pool, because this FIA column just need to be empty. Why? Because as soon as we have the FYA, I already claimed this car when I buy it, so I don't have any balance here. So it need to be minus from the general pool. All right, so that's it so far. Now we'll make the balance. So let's find the balance. This will be 0. Let's find the balance for that. You can make one column empty. It's not a problem. 156 equals 0 minus the 8,600. And that gives you 147,400. All right, so this is our first one. The next one, we have 2 car now. So it will be 22,000 plus 60,000. It's 142,000. And that's it. Now I need to give the allowance. So the first allowance will be WDA 18%. and 6% for the special rate. This one is 18%, so let's do that. 147, 400 multiply 18%. So that will give me 26, 532. And this one is 142,000 multiply 6%. That gives me minus 8520. And if you added this to 8520 plus 26, 532, that will give me the allowance, total allowance. So 26, 532 plus 520, 35,052. So that's my total allowance. And the carried forward balance will be same. So CF WD, just a minus. So 147, 400 minus 26, 532. That will give me 120,868. Same thing here, 142,000 minus 8520, 133,480. And I added this to, should be 435,052. Just added this to. All right, so we're done for our first 12 month. Only the calculation left for the 15th of January, the PM card 24,000. So let's do that. So now I'll do for the next 4 months. So we set the balance brought forward. So we said tax return value brought forward. So tax value BF, and the same thing, we just need to copy here. Whatever is the closing for last period is the opening for this period. So we'll carry on exactly the same way. All right. Now we have to add the PM card, the production manager card. It was 24,000. And it was more than 50 grams. So it will go to the general pool. And that's it. Now I need to make a total. And we added this too. 120,868 plus 24,000. That's 144,68. This one have nothing, is the same one. 30. All right. Now we need to give the allowance. So this time we'll do same thing, just copy. And this time we have to give for 4 months. Remember that. 4 months. That's the trick. That's the reason they make this question, so that we understand it. 4 months. So we have 144,868 multiply 18% divided by 12 multiply 4. So we have 8692. 8692. Do not forget the minus. And we have 133,480 multiply 6% divided by 12 multiply 4. That's 2670. And minus as well. Need to add this to the total allowance. That gives you 11,362. All right, so now we just need to minus to find how much is the closing balance. So 144,868 minus 8692. That gives me the closing balance 136,176. And this one 133,42670. That gives me 130,810. And this is remains same. 11, 62. And this one is called the closing balance. Same way we say before the closing balance. We can say the same thing here. That's all we have to do to make our capital allowance calculation. This question looks big, but if you practice little bit, only few things, you have to remember. One thing is very important. You need to remember if there is a sold car for the FYA, do not do anything because this car already claimed 100% FY before. So if you only see the disposal, don't do anything. The next one is a private use. They can give you just extra column for the company, and you might think like, oh, there's a private use, I have to use the private column. Don't do it. It's only for the sole trader. So have to be very careful. Other than this, capital allowance is not very difficult point to do. Even if you make some 1 or 2 point wrong here, you will still get the full mark, like not full marks, you'll only lose the marks for that point. So obviously if you see like 90% is done correctly, you will get 90% question, because this question will be marked by the examiner, by the human, not by the computer. So obviously you'll get some marks for this question. So if you get 90% right, you'll get 90% marks on this question. So my advice will be like, make sure you read and make a note. So for example, the AIA, the FYA, what is the condition for that, especially for the full expensing? What is the condition? It has to be the new asset. So if one asset is eligible for both, for example, for the AIA and for the full expense both, so you should give the AIA first, or you should give the full expense first. So what is the condition? So you need to read that, because some of the asset, for example, the full expense, if you claim for asset and later on if you dispose that asset, that will create the balancing allowance or balancing charge. So you need to make sure you make all this note, and then we'll be absolutely ready for your capital allowance and the tax adjustment question. So that's how we need to practice, and you have to make sure like you remember everything. More you practice, you'll remember more.